Hello, my name is Claudia Tornquist. I'm the president and CEO of Kodiak Copper. Kodiak is a copper exploration company focused on the MPD copper porphyry project in southern British Columbia, where we've made a high-grade discovery, have drilled now since almost 85,000 meters, are really building scale to show and demonstrate the size potential of this large porphyry system.
And my name is Hugh Agro. I'm the president and CEO of Revival Gold. We're developing two gold projects in the western United States with 6.2 million ounces of gold currently under development.
Right. Thank you very much for joining us today. We are going to talk about M&A because that's what's happening out there at the moment. Some pretty big transactions happening across the board as these producers are throwing off cash for fun. Before we kind of get into some of these questions, I mean, Claudia and Hugh, could you actually give us a little bit about your M&A experience and background, where you come from slightly different parts of the M&A landscape? Claudia, you first.
Well, my background in the resource industry was for 10 years almost with Rio Tinto, so large multinational, and part of my work there was also in the M&A area, so looking for opportunities to buy and or selling assets that were non-core to Rio Tinto. And I'm now obviously on the other side of the table with a junior with a major big porphyry project that's probably not going to be developed by us as the junior who discovered it, but will likely be of interest to a big company at some point. So I'm establishing all these relationships and having all these talks with potential future acquirers.
Right. And you were in London for a while as well, weren't you? Were you working in M&A over there?
I was when I worked for Rio Tinto, that was in London, and yeah.
Okay. Hugh, what about yourself?
Well, I'm a mining engineer by training, and I've always worked on the strategic and financial side of the business with Deutsche Bank, Morgan Grenfell on M&A, and then with the senior gold companies, Placer Dome and Kinross, and now driving Revival Gold in what we think is a fantastic spot where there's a real disconnect between the pace of global production and the pace of supply of new projects, much like Claudia's talking about for these majors and super majors to fuel their future pipelines.
And a bit of banking background as well, Hugh?
Indeed, yes.
You're not allowed to mention them. They should not be mentioned. Okay. One of the big boys.
On the dark side for part of my career, yes, in banking.
Okay. Me too. We'll get over it. Right. Okay. Well, let's talk about the M&A landscape. As you said at the moment, obviously, I've mentioned the fact there's some pretty big deals happening out there in terms of pure acquisitions, mergers of equals, and all colors of transactions happening at the moment. Claudia, I mean, how do you read the industry landscape at the moment?
Well, I'm obviously particularly focused on the copper side of things, where there have been a number, as you say, big transactions going on in the last 2 years or so. The majors are making good money, have cash flow because commodity prices are high, both copper, gold. And that's typically the situations where you then see M&A. And in copper in particular, the pipeline of projects going forward is very, very low because there haven't been many discoveries in the last 10 years. And so many of the big companies are looking for this future supply. And you've seen a number of big, mainly producing assets acquisitions like our neighbors, Copper Mountain being acquired by Hudbay, or BHP bought OZ Minerals, a big many hundred millions or $billion acquisition. And this year, for the first time, we saw a larger exploration stage acquisition with Filo and Jose Maria being acquired by Lundin and BHP. And I hope that sets the stage. And I think it's quite likely to happen that we'll see more of those types of transactions going forward.
Yeah, and we'll come on to how you set yourself up for success in that kind of context in a second. And Hugh, if yourself in the gold space, obviously some pretty big deals happening right now.
Oh yeah, and just recently Coeur buying a project down in Mexico. Goldfields, of course, with the project in Canada. And really interesting to see Anglo respond to that acquisition by Goldfields by buying sentiment in Egypt. So we're already starting to see the response and the reaction. And of course, shareholders get loaded up with winnings from these takeouts. And that's very beneficial to the development space, both for copper and gold.
Absolutely. And well, even lithium, you said Rio Tinto forecast 6.7 billion on a lithium transaction in the US. It's definitely happening out there. I don't know if it's super cycle is a word we could apply yet, but it's certainly the mood has changed. And Claudia, you're at a conference, the Red Cloud Conference in Toronto at the moment. What is the mood? I would say the mood is definitely better than it was 6 months ago or a year ago, with the market showing a bit more life and definitely more sort of optimistic mood parameter. Right. And that's mainly sort of a retail conference, I think, that you're at there. And we were all at a conference in Colorado Springs and up in Beaver Creek, about a month ago. And again, very, very different moods. So I can back that up. Hugh, with regards to the types of M&A deals that you're seeing in terms of the, kind of the sort of mergers of equals, I think is always a phrase I kind of laugh at, because definitely one management team is exiting left, and probably with a skip in their step at the moment. What are the types of deals that you're seeing, and why are they happening? Certainly for the gold guys, what's the problem they're solving?
Yeah, well, the one that we traditionally look to is the Great Bear style of transaction, which of course Claudia is very familiar with, having had that great success with the team she was involved with there at Great Bear. But that's not the only way these things are happening. There are strategic investments that are happening. There are mergers of equals where there's a 1 + 1 is 3 or 4. So we're seeing some of that, and lots of discussion around that latter style of transaction. Scale matters in the gold space, certainly right now, and I think there's a lot of clamoring for scale, not just to fill cupboards that are bare with projects to develop for the future, but also to attract passive investors. And that's a big feature of this M&A market, not just for the likes of us, but also for the likes of the Newmonts of this world, acquiring Newcrest, of course, to respond to investor requirements, need for scale, taking advantage of that S&P 500 index, which they cover it, and it's so important to their share performance.
Right, and Claudia, how do you view this? So say, like copper, gold, there's some big parallels, and quite a few projects which have both those metals in their assets. But it feels like copper's coming from a very different place, in that it's an industrial copper, in the sense that these kind of big EV build-outs that we're talking about, whether it be full EV or hybrid, or even the infrastructure build-outs in China, as announced a couple of months ago, the supply is an issue, it seems, right? So how do you kind of again read the supply side of that equation at the moment? Well, in copper, they have a recent history in terms of just discoveries and additional supply, additional pounds being found, is very, very stark, in that it's literally fallen off the cliff. And in the last 10 years, there haven't been any major copper discoveries. So we know already now, with it taking 20 years from discovery on average to building a mine, in the next 10 years, there will not be a new big copper mine. Yet we're facing very strong demand with electrification, AI, and so on. So I think that's part of the reason why you see gold companies now more and more also going into the copper space. I remember when I was at Rio Tinto, which is now a couple of decades ago, the gold players, they would not touch copper with a barge pole. But nowadays, you see, whether it's Newmont acquiring Newcrest or other transactions, where there are definitely gold players also looking for good copper assets.
I think, sorry to jump in here, but I think, Claudia, one big difference between gold projects and copper projects is that these copper projects today are massive undertakings, big capital undertakings. And you made the point earlier that you've got 85,000 meters of drilling and building out scale, and a larger partner will develop this project. I think a big difference is even as gold companies go into the copper space to get that scale and get long-lived assets, one of the advantages of being in the gold space is that we do have the opportunity to advance these projects on our own with relatively modest amounts of capital. That's not necessarily the case with the copper projects. And I think that gives us an opportunity to angle for alternative sources of capital beyond, the big player coming along and taking us out in one foul swoop. But the disadvantage to that is we've really got to build these projects so that they can scale up, because ultimately what all of our investors are looking for, both corporate and institutional, is long-lived, predictable assets. And I think that's where the copper industry really is so attractive to the gold business.
Yeah, well, there's a key word there, predictive, because we've seen a very difficult market the last 10 years or so for juniors, not just explorers, developers too, looking for alternative financing, because conventional financing is bruised somewhat from some pretty destructive behavior out there. Some of it they're making, some of it not. And I referenced Rio talking at 6.7 billion for a lithium project. Who would have thought it? Who'd have thunk it in this market? But they're making a long-term play based on where they see the market going and the size of the project. For gold projects, clearly, it used to be the case. I think if you had 1 million ounces, then it became 2 million ounces, 3 million ounces. I think today's number is 5 million ounces. And 10 years life of mine just doesn't cut the muster anymore, does it?
Well, it doesn't for a Newmont or a Barrick at that, or an Agnico at the scale they're at now. Of course, the gold industry's changed an awful lot. There's been this consolidation, we talked about that, and this quest for being relevant in the overall global investor space. So you're right about that. But I think there's a lot of money made at progressing projects in a phased approach, and the Australians have done it very, very well. Some of their best performers are companies that are in the $200-300 million market cap space, going to $2 or $3 billion. Same goes with Canada and the U.S. And I think that's something that makes the gold space unique. It is still possible to drive value without waiting for a big kahuna to come along and finance your projects, whether that's a GM or a Rio Tinto. There is the prospect of forward motion.
Right. Okay. Okay. Fair point there. Claudia, for you, I think Hugh's referenced the fact that typically a lot of these kind of big copper projects require a big balance sheet because the capex is enormous. Because that's the kind of deals that people like to do. They like the 20, 30 year type of mine. Is it possible for small copper players to kind of get up and running quickly? And if so, what sorts of copper plays are those?
I would say, on average, in copper, that the share of production comes from very big porphyry mines. That's like 80 up to 90% of the world production. And those are big projects, big mines, multi-billion dollars, capex, etc. And there's only a small share of the overall market, which are smaller mines. So for a junior such as Kodiak, when we take on a porphyry project, we like it because it has size potential and there can be a big price at the end of it. But also at the same time, as much as I would like to build a mine, I don't think I will be the one who will take MPD into production, simply because it is a very large project that will require many hundred millions or billions. So likely the future for Kodiak will be that at some point, one of the big players will like what they see and will take us out.
Right.
Our mission or what we want to do at Kodiak is to increase value or create value at the drill bit, drill out what we have to really demonstrate the size potential, so that we then at some point get many majors interested and they'll write us a big check. And that's typically what you see. The majors, they don't want to do the exploration. They don't have the bandwidth to do exploration everywhere they would want to do. That's why they let the juniors take the really high-risk work. And once the project is de-risked, a certain size potential is visible, then they swoop in and write a check.
Right. Okay. And before we kind of move on to how you guys position yourselves with a little bit more detail, Claudia, is just on the kind of broader M&A component, is we've seen a lot of things affect the speed at which you move from discovery through to production. Claudia, you said 20 years. I mean, those sorts of numbers across the board, and NGOs and social license and permitting and license. There's lots of reasons why it takes a long time. Do you think there's any and I say this in the context of critical minerals lists being formed around the world, is there any kind of regulatory change or any more red flags that investors need to be aware of, which is going to make it difficult to see mines advance or projects advance so that M&A can happen? Hugh, do you want to pick that up?
Oh gosh, you're onto a really interesting theme here, which is over the last 20 years, I think we've seen transactions move. Maybe going back 30 years to talk about Arequipa, a classic example in the gold space, 9 drill holes, $1 billion paid for an asset. That's no longer the way things work. In the case of Windfall, Cisco's project, the project that Silvercrest developed, Sentiment, these were advanced staged, many hundreds of kilometers of drilling, feasibility studies, permitting, all of the boxes ticked. And I think that's a feature of today's M&A cycle, is that no longer is it the case that these bigger buyers are going to take risk. If they can get it, they'll take these fully advanced projects. So that's a big difference between, I think, where we were 10, 15 years ago and where we are today. And you've got to be able to have the wherewithal to get through not just the exploration drilling, but the community-related aspects, the metallurgical-related aspects, the social, the engineering.
Right, and what about? I'm going to move on to kind of the sort of strategic positioning. How do you set yourself up for success and opportunities?
Well, I think that's part of setting yourself up for success. And again, I point to having capable teams. Doing the dialogue that Claudia spoke about earlier with these major players, so that you have a feel for what they need to see to tick their boxes, and it's very interactive. We all have these relationships. We work these relationships as best we can to get as much intel and insight as to what will tick the boxes, and we go about doing that hard work. I'm sure that it's the same at Kodiak as it is at Revival Gold. We learn from those site visits and those interactions with those senior corporate development teams.
Well, give some insight on that one. What are the things that the boxes that they need to tick off here, rather than just the generic? I mean, specific things that shape the way that the processes that you employ internally. What do they look like? What
we need to know, understand what the acquirers are looking for. We touched before on size. That's, I think, the number one sort of criterion. If you have a small, tiny project, then you'll never attract the interest of a major because it needs to move the needle for them. They certainly look at geography and jurisdictions. And my experience, many of the big companies, they are getting more and more risk averse. We are in British Columbia with Kodiak, and I'm hearing that often as companies say, we only want North America, Australia maybe. So if you have a project in, say, Africa, the universe of potential acquirers is a whole lot smaller. And what I've also been hearing more and more, and that's really different from 10 years or 20 years ago, is that the whole permitting, indigenous relation, environmental side, that has become a big focus because the big companies, they've just seen or had projects that got stopped in their tracks late in the day after many millions of investments because there was local opposition or things like that. So having all these indigenous relations in place, solid environmental programs, all of that is becoming more and more important to make a project attractive and acceptable to a major company as an acquisition target.
Well, I can validate that for you. I've referenced, Rio's recent acquisition of a lithium project in America, and they've had to do that because their project in Serbia has been held up for 10 years because they cannot get the support locally. So, absolutely. What about you, Hugh? How do you see it?
Well, I'll give some specific examples, and I love that community theme that Claudia spoke about, because when we have visitors come from large corporates, they are very interested in getting out and speaking to people in the community where they get a chance to do that. They like to be able to see that we're active. And so one of the things we've done is we've instituted an annual process of an open house with the communities we're working in, where we give a chance to update and receive feedback and engage. And that's one example. On the technical side, again, I'm just picking up on one of Claudia's great points about scale. When we have folks come out and look at our project and they look at 5.5 kilometers of mineralized trend, the natural next question for them is, well, where do we add the next 5.5 kilometers? And so this has helped guide our exploration strategy as we've worked towards geophysical surveys, indicative tools for picking up further structure. And that's led to success in defining structure, defining targets, specific targets, which we can then go back and report on. And so this is, it's good for the bigger companies that are out visiting our project. It's good for us. And I think it's a natural learning from the M&A that's going on in the space. Just to bring it back to the theme of this discussion, what can we learn from the M&A? We can learn what the heck these guys are looking for and how to best position our companies for it.
Right. And Claudia, I've got to come to you because you work with Chris Taylor of Great Bear fame, and you work very closely together on how you move this company forward. Because Great Bear was a slightly unconventional project in the sense that we didn't put out a sort of economic study famously for a very, very, very long time. Spun out of royalty, unconventional behavior. But I've got to ask you about the copper conventions, right? In terms of what particular capabilities, or how do you manage the assets to make yourself more valuable to an M&A scenario as you move across the phase? Because obviously that's going to change from early exploration to advanced exploration through development and advanced development. Where are you now, and what do you recognize that you will need to change and adapt as you move forward?
Well, where Great Bear was certainly a big exception is that they never got around to actually coming out with a resource, and were taken out before that happened. I think that's really quite unusual. You don't see many of those situations around. What's very typical is for the big companies wanting the project to be de-risked, and in practice that often means a resource, 43-101 compliant resource out there in the public domain. And that's often typically when you then see the M&A hotting up. Like in our region, we had GT Gold company also doing similar porphyry exploration to Kodiak. They came out with a resource and got snapped up by Newmont, and I think that is typically more often what you see. So that's sort of a milestone I would always watch for in the company's development. And what I'd also highlight is that it's not company specific at all, is more the general market conditions. Because logically, you would think that, for example, in the current time where there's been a bear market for the junior sector in particular for 2 years, share prices are really depressed, companies are cheap, that's where you'd see a lot of M&A, but that's not what you can observe in practice. It's often once the market picks up again and once share prices are going up, that then the real M&A activity picks up. That then people urgency develops, people get the oh my God, I'm going to miss the boat feeling, and then you see a flurry of M&A deals. So often it's also the market turning and getting more optimistic and share prices increasing, which is really a catalyst where you then start seeing more M&A.
That's a great point, Claudia. I think we both worked in big companies where we see that clamoring fever for replacing assets and looking over one's shoulder to see one's competitor buying that next great project. That creates a lot of excitement, not just in those big companies, but with investors. And investors, I think, are looking for value today. Gold's run, it's at record highs again today in the last couple of days. The gold stocks certainly have moved up, 30, 40, 50, 60%. And yet, if we look at the juniors, I think both the gold juniors and the copper juniors, there's a ton of value there. And so the investors are saying, look, I've just taken my winnings from selling this asset or this position in a major or an intermediate, and I can redeploy into a junior.
Do you think that's happening at the moment? Because looking at some of the funds that have made some money on some of these big transactions, do you think they're going to be very quick to redeploy back into the sector, or are they going to be sort of taking some of the winnings and keeping that? Because there's been a lot of redemptions going on in the market for the last 3-4 years, and funds have struggled across the board, and some pretty big numbers that have come out of the mining space. Do you think people have short-term memories and go, it's great, gold's on a run, it's going to stay like this forever, and let's pile back in, there's money to be made?
No, I think there'll be more caution this time around for sure.
Yeah.
But listen, anecdotally, we've heard about 2 or 3 new funds that are in the process of being put together. Existing funds that are creating new LPs. There's a lot of money out there circulating for the space. And again, I don't think you can go wrong on either of these metals, copper or gold, because of that dire situation that Claudia spoke about. Supply versus demand of new projects.
I can certainly echo that from what I'm hearing here at the conference I'm at the moment, hearing of funds being put together, pools of money, of players who haven't been in resources in years, getting back in. So I think there's definitely money on the sidelines. And I think the situation we're seeing where commodity prices are high, the producers, the developers have seen big increases in their share prices, but the juniors not yet. I think the juniors just now, sort of the market starts perking up a bit. So I think we're poised for more M&A in the future. I wouldn't be surprised to see transactions coming through as soon as the junior prices or share prices start moving a little bit.
Okay. Yeah, it always feels kind of expensive. You always wonder, well, why do these majors wait? And Claudia, you can tell us in a second, where you were with Rio, they seem to wait until the market is peaked before they start going. But I guess they're famously really bad at exploration. So it's all relative. Even at peak markets, these are cheap acquisitions for them, given what it delivers for them. But Claudia, can you talk to about, from your Rio experience, talk more broadly about when M&A happens, how the companies need to prepare themselves to be integrated into an acquiring company or a larger company in any way? Do they need to worry about that, or does the Rio say, "Don't worry, we'll work it out. Just focus on the sale"?
I think the latter is typically the case. Like the big players look at the asset and look whether it's run and whether the exploration is done in the way they are comfortable with. But once they've come to that judgment in their due diligence, and once the deal is done, then they'll motor ahead, and the juniors are out of there.
I was hoping for some clues. That's all. Right. The other thing that happens in a market like this with these kind of merger acquisitions is a lot of movement of people, right? Talent, human resource. In terms of, there's not room for 2 sets of management teams or 2 sets of exploration teams in all this. Is this a time to kind of pick up quality, Hugh?
Pick up quality people?
Yeah. People, yeah.
Yeah, look, you definitely want to be locking down your talent before things start really rocking. We think about that at Revival Gold. And the way to do that, of course, is ensure that your talent are also owners in the business. And motivated to be part of those successful, days ahead.
Yeah. Same for you, Claudia, I imagine. You've got hang on to the good people and pick up the good ones if they come along. You've both been involved in M&A for a while, so I'm trying to get some generic, insight clues here that can help me kind of spot which companies might be readying themselves and which ones are going to be more attractive out there. So in terms of things that you have learned over the years, that kind of help you in an environment like this. It's been a long time since M&A's been as rife as it is today. What are the kind of lessons learned in terms of the good, the bad, and the ugly, Hugh?
Oh gosh, it's easy to second guess transactions when they occur. We've heard a lot from some investors about the gold space and how it got ahead of itself back 15 years ago or so. And that's true, but gosh, those same investors that were complaining post market turn were the same ones cheering and asking for transactions. So I think the cautionary note is be wary that we are, or be aware that we are in a cyclical industry. And that counts at the top, but it also counts at the bottom. And I think, as Claudia has tried to express, there is excellent value in the junior space right now. In fact, I can hold my hand on my chest and say I don't think it's been ever as good relative to where the metal price is, the health of the sector, generating by RBC statistics in the gold space, some $4 or $5 billion a quarter of free cash flow. This is a wonderful time to be in the development space, and there's great value. And recognize that. And then recognize it when things start to top out, when we see one too many parties taking place, one too many, chairmen and CEOs patting themselves on the back for transactions executed. It's the details and the execution and the delivery of free cash flow that really matters in the long run.
What about you, Claudia? What have you picked up? Sorry, Claudia, are you a first-time public market CEO?
I am, yes.
Right. Okay. So this will be brilliant then. So for you, when you walked in, did you think it was going to be like this? You walked in and by the timing also, you walked in a pretty tough market. You must have picked up a few things along the way.
Well, that's a difficult question. I can tell you certainly that life in a junior company is rather different from life in a multinational. And it has served me well to have worked on both sides of the table. And in terms of lessons learned, I think what's for the juniors key, what you never have in a big company, is the whole capital markets understanding and the whole financing side of things and marketing side of things, and how to get that right and create value that way for your shareholders before you're ready for a takeout, or ready to get the majors or want to attract the majors' attention. I think that's a big focus for a junior company, and a big way of creating value for their shareholders before it comes to the future M&A then.
And what about your stakeholders then, Claudia? I mean, how do you... You've had to manage them through this period as well. Say, look, as he said, it's cyclical business, it's mining, it's tough, and all of that sort of stuff. But here's our plan. Have you been able to kind of get them to understand that, or has there been sort of all sorts of reactions when you're talking to them?
Look, for Kodiak, we've always had a very clear strategy with our MPD project. Our vision was from the start. It's a big project, and we will work to demonstrate critical mass and build scale. And that's been our strategy from the start, and that's what we have been delivering on. And so, we have been clear with that. And even though it's been a tough market, and I would argue the market at this point on our share price doesn't recognize our progress and our success, it's still a clear strategy, and our shareholders understand and appreciate it and see the price at the end of it. And so I think it's more a question of like just also communicating their strategy well and getting buy-in for it.
Right, and to a rather blunt question, not all M&A is good M&A, and it doesn't always work out. When you're looking around, say the last 6 months worth of M&A, well, beginning of the year, we'll say, do you see some things that concern you? You don't have to name names. Did it all make sense to you?
That's a tough question.
At this point in the market, it's hard to see transactions where you have a clear feeling, well, they overpaid, because really most acquisition targets, share prices are beaten down, and the deals are done at very reasonable levels. I think it's normally the times where there are flurries and flurries of transactions and the champagne corks fly, where you see the transactions where then afterwards, with the benefit of hindsight, it's very clear that the price tag was way too high, and people got ahead of themselves and egos got ahead of themselves. At this time in the cycle, I don't see those types of transactions.
Yeah, and the reason I ask is because I think there's a recent sort of bid in the uranium space, and I think people were surprised at how small the premium was, 20% premium to an already beaten up price. So, that's the world we live in. It's time to get used to it. Hugh, what about you? And you said it's a difficult question, but I say you don't have to name names, but do they all make sense to you?
Yeah, it's a difficult question because we can all, again, look back with the benefit of hindsight. So much depends on, how the market moves 2 months, 3 months, 2 years, 3 years after transactions taking place. I just want to mention 2 transactions that I think have gone really well. One of them recently and one of them in the not so distant past in the gold space. I thought Gold Fields did a really good job, and I thought it was a great outcome for Cisco. They came in a year ago as a joint venture, just over a year ago as a joint venture, learned about the windfall asset, got comfort with it, and yet they were able to buy the rest of the asset in their transaction for less than what they might have paid a year ago, and in a much more de-risked state. So I think Gold Fields did a good job, but I also think Cisco did a great job because, of course, they got the money that was required by doing that joint venture to advance the project and ultimately deliver the takeout that shareholders were looking for. And that's a cash takeout. So those shareholders going away with cash money to reinvest in the gold space, the next developers, copper, gold, as they may be. So that's one. The other one that I think was a really good move by the team at Kirkland Lake, led by Tony McCooch, was the acquisition of the Detour project. Remember, Kirkland Lake was a high-grade project, and going back to what Claudia and I were earlier speaking about, this predictability in the mining future and the importance of scale. I think what Tony recognized is that scale really mattered, predictability really mattered, and gosh, he picked a perfect time in terms of being just ahead of that move in the gold price on an asset that was mispriced in the market. And of course, that led to the Agnico transaction, which needed scale to get to what their goals were in doing M&A in the space. So I think that was a really good move by that team and that was a questionable move at the time, if you remember. Why are we trading high-grade gold production in Australia and Canada for this very large, low-grade project that's had some challenges? It's worked out beautifully for the shareholders.
Yeah, lots of lessons to be learned. Positive lessons to be learned as well. And look, I think we're probably out of time here. And we didn't even really get to talk about innovation and transformation. As more money is poured into the sector, or as more money is being made, certainly with gold, precious metals, even copper, I'd like to see some of these companies pile this into new technology. AI is being mooted, yet kind of see it really deliver, but also underground. Love to sort of see these companies put a bit more effort into that. It needs it, that's for sure. So Claudia, thank you very much for your time today. Hugh, yourself as well. So folks, go have a look at Kodiak Copper and at Revival Gold. I think you'll agree, two pretty smart CEOs who seem to know what they're talking about. Thank you very much for your time today, guys.
Thank you, Matt.
both.
It's been a pleasure.